Hey everybody, Matt over here at League. Wanted to talk to you guys today about closing costs. Closing costs are something that everybody knows they have to pay, but nobody really understands what they're paying for. And there's a lot of different items, and so it can get a little confusing. So I want to kind of give you a couple minutes on what to expect and how to best handle them. So as you're planning on purchasing a home, we are going to plan on 2 to 3% closing costs, right? So we're going to look at closing costs today. As a buyer, most of the burden of paying closing costs tends to be on the buyer, so we're going to focus on those things. You can plan though on whatever the purchase price of your house being, paying 2 to 3% in closing costs. If your purchase price is rather large, this percentage may go down. If it's lower, it may go up, but this is a good rough estimate. If you're paying $400,000 for a home, you might be paying $8,000 to $10,000 in closing costs. So plan on that number right there. But what do those closing costs look like? Well, we've got a few different kinds, right? So our first type of closing cost is loan related, okay? These are items that are going to directly relate to the lender and the loan you're getting from them. So these fees are like origination fees, right? Credit report fees, appraisals, okay? Recording fees, all of these kind of things, all right? These are paid for by you to the lender and to the lender's vendors. Now, these items are negotiable, right? Origination fees generally are half to 1% of your loan. So if you're buying a $300,000 house, this could be as high as $3,000. This is a negotiable fee, okay? You can work on this. Some of these things are set, you can't negotiate. It's really good to have a good agent in your corner on these to help you, even with your lender, decide what's the best product for you, okay? These tend to run sometimes 50 to 70% of your total closing costs. So if your total closing cost is $10,000, this can add up to quite a bit. You know, your appraisal, your original, these can be a lot. So be aware of these, check them, learn how they work, right? Okay, so those are your loan related closing costs, negotiable items, okay? A second type are your prepaids, okay? These are items that you're not necessarily a fee. These are fees. They're going toward somebody. They don't go toward the purchase of your house or any future expenses. Prepaids go toward future expenses. These normally tend to be taxes and insurance, okay? A lot of times you'll have prepaid interest too on there. If you'll see that deals with how your mortgage interest works on days, you'll pay some prepaid interest as well. That's how you get to skip a mortgage payment a lot of times when you buy a home. You don't pay the mortgage payment till the month following. But know that in these items, the lender is going to escrow these expenses for you, and they will pay them for you, and they will collect money monthly. Well, the lender likes to have a little bit of cushion in there, so they're going to collect up front a set amount of what they think you need in there. So a lot of times this may be 3 months, and a lot of times insurance is usually a year's worth. So if your property taxes are $10,000, they're going to divide those by 12, and they're going to collect 3 months. Insurance, they're going to collect a year. These are prepaid expenses. They do not, or they go toward future expenses. They're not going to be something that you pay for now. This will help you in the future go toward these property maintenance expenses, okay? All right, and then I want to focus on our big ticket items, okay? So what we have here are, these are the things that really are going to cost some money. Our biggest one here is title insurance, okay? Title insurance, without going into too much detail, really it ensures your ownership in the property, right? And it's an insurance policy that is paid for by either the buyer or the seller. And these can be significant, right? On a $300,000 home, they can be $2,500. So you're not going to want to take this lightly, because either the buyer or seller can pay for it. It's a really good time to lean on your realtor for help on who pays this, because they can save you a lot of money here. A good agent can help work with this expense. But this is something you need to plan on and who pays. Your next expense is going to be your property taxes due. It's different. This is for future property taxes. This is for the current year. So if I buy a house on July 1st, right, I am going to pay for 6 months in the future property taxes. I will pay for July through December, right? The seller will pay January through July. So we'll both be responsible for 6 months of property taxes. We're going to settle that at closing. So depending on the time of the year you buy and when property taxes are due, you will this will be done differently, but realize there will be an expense here and you will be responsible for the amount of property taxes due. This is a non-negotiable item. It's what the taxes are by the county. So you will be on there. And then our last one right here, okay, is your survey. Surveys can run $500 to $600, okay? Again, like title insurance, who pays for the survey is a negotiable item. So working with your agent, you can be able to save $500 or $600 here because most lenders require a survey. So be aware of these items. These are going to be larger ticket items that are negotiable items for your closing costs that can make this number go down, okay? The last thing on your closing costs to know is closing costs are above and beyond your down payment. So if you're buying a $300,000 house and you're putting 10% down, so you're putting $30,000 down, and you're borrowing $270,000, okay? $270,000 plus 30 equals $300,000. Now, I've got to pay this 2 to 3% on top of these numbers. So I'm bringing my down payment to closing, and I'm also bringing my 2 to 3% closing costs right here. So this is down payment, and this is my closing costs. So I've really got to bring 30 plus 10 or $40,000 to closing, right? And the bank's gonna lend me $270,000. Now, realize this number here, we can negotiate who pays that number. So the seller, he can kick in some money here, right? So having a good agent will allow them to work with you on how much money you bring to closing, right? Your agent can work with the seller on who pays what closing costs, and this can drastically affect the amount of money you need to close. So realize that these numbers aren't set. A lot of people believe, oh, my closing costs are $9,000, they are what they are. They're not. There are definite things you can do in here, but you need to understand how the process works, and more importantly, you need somebody who's done it before that can really walk you through this. So hope this helps kind of give you a general idea of how closing costs work. So when you are ready to buy your home, you're prepared to walk through this. Thanks.